want an exposure to a market or an
Everything they need in one place.
The world's foremost authority on individuals, advisors and institutions.
Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall, and here with me today is Stuart Mitchell of the SWMC European Fund. Hello, Stuart.
Good morning. Hello.
So there's a lot going on in the macro situation with Europe at the moment. I thought we'd start with the sort of biggest cloud over European investors' heads, and that's Ukraine. How much of an impact does that have on European stock markets?
In our view, the impact will be very, very limited. At the end of the day, markets are driven by earnings and driven by the outlook for the industry in general, and we think the impact will be absolutely minimal. In our view, also in terms of geopolitics, what's happening now is something which perhaps should have happened over the last 20 years. It's the rewriting of the boundaries between the kind of liberal, pro-Western part of Ukraine and, of course, the more Russian, Soviet-orientated eastern part of Ukraine. And in our view, because there's been so little reaction from major political leaders, it's something which has kind of been accepted tacitly. Anyway.
Talking about those major political leaders, we've got some upcoming European elections at the end of this month.
Yes.
How much does that impact sort of European industry?
In our view, the impact will be very limited. I mean, we think it's likely there will be quite a strong anti-European protest vote, and we'll more likely not see that in Britain. We could see it in France and even in Germany. But at the end of the day, austerity proceeded throughout Europe with very little civil disobedience and objection. The majority of people in almost every country in Europe wants to remain part of the euro. So we think the elections which are really critical are the large kind of national elections. That's when the decisions about Europe are made, not a protest vote at the European level.
And we've got some of those coming up this year, haven't we?
We have indeed. So the European elections will be coming, I think, in the next 3 weeks. And in our view, that there could be some, even in the UK, it's possible UKIP could become the largest party, but again, it's more of a protest thing. And at the end of the day, our view is the majority of people within Europe want to have a closer tie, closer integration, and that's been supported by all the opinion polls around about the eurozone, and views in general of whether European Union, which direction the European Union should move.
So Farage isn't necessarily going to have a negative effect on stock markets then? We
don't think so. It's kind of interesting, isn't it, Farage? Because in our view, it's more of a kind of protest, anti-political thing. We don't believe the debate has really yet begun in a serious way in the United Kingdom about Europe. And in our view, it's very much Cameron's to win, to present the pro-European case at some stage, as long as he can get some kind of rewriting of the boundaries and perhaps some kind of, bringing back of power to the UK. But I think that the serious debate hasn't yet happened.
If it's not the European elections and it's not the Ukraine that the sort of the challenges for you as an investor in European stocks, what are the concerns?
At the end of the day, for us, it all comes down to earnings. Earnings are everything, and of course, European elections and what's happening in Ukraine just has very, very little impact. What could really upset the outlook for our companies, we think, is first of all China, and I think there's a very significant risk the economy could slow down quite a lot further. So we have very little exposure to anything which is China-faced in our portfolios or anything emerging world facing in our portfolios. I think the other thing, which is maybe more controversial, but what has surprised us recently in our company meetings is that when companies talk about America, they often say that the recovery, the follow-through hasn't been quite as great as some people expected. And we just have to be very careful that anything particularly US-focused, we're not being a little bit too optimistic on the earnings outlook. But the other flip side of that is, of course, Europe is surprising. And we think earnings will be significantly higher than most people expect over the next 1 or 2 years.
So you seem to suggest then that perhaps those most appealing European stocks are those with a sort of domestic revenue focus of Europe, of UK?
That's very much our view. And curiously enough, it's, we're 2 or 3 years into the bull market, and yet domestic European stocks have still lagged dramatically behind. And of course, the main reasons are there's still a kind of risk premium around the euro, and most people are very sceptical about any sort of recovery in Europe. And people like us are out on the road every day visiting companies. We've just been astonished by the rapidity of the recovery. And also the risk premium continues to come down. I mean, would you believe it? Italian and Spanish government bond yields now yield less than American government bond yields. It's dramatic what's happening, and it hasn't still been reflected, we think, by stock markets.
Stuart, thank you very much.
Thank you.
This is Emma Wall from Morningstar. Thank you for watching.